right, welcome back to Follow the Money Radio, and I'm joined today by my good friend Tom Cloud and Dan Scoggins from Cloud Hard Assets. Tom and Dan, it's great to have you today. Thanks for joining me.
Great to be here, as always. Always enjoy it.
Glad to join you for the first time.
Yeah, Dan, it's great to have you. We're going to talk to you, Dan, in a few minutes. First, Tom, I want to just dive right in and talk about a few things that people are focused upon. Today, of course, we're recording this on the 16th of June. And today is FOMC Day. So the Fed is meeting. They're going to be talking about this massive bond buying program that they've had for some time, $120 billion going into mortgage-backed securities, into government bonds, and, of course, 0% interest rates. And they're likely going to unveil something about a tapering, which means they're going to start cutting back a little bit on those bonds before they start raising rates. This has been good for gold, clearly, and it's been good for the precious metals complex in general. What are you looking for in today's Fed meeting? And what, from your experience, you've been doing this for many years, what do you think the Fed is up to here? What do you think they're planning on doing?
Well, I think they're planning on trying to play a game like they always do when you have the kind of money that's being created by the Fed. I mean, I've never seen the stock market this confused. I mean, everybody's sitting on looking at whether it's equities or bonds or gold or silver, everybody's trying to wait. I mean, it's our office affiliation in Singapore put out something this morning talking about the Fed. They think exactly what you just said. They're going to continue as close to zero rates as long as they have any demand to go in there and buy the bonds and securities. And we're going to talk about something else in just a few minutes that ties it together, because you're looking at a time in history when the whole world financial system is on the brink of changing. And this didn't come about by mistake. And what our, out there watch is to keep going, because certainly there's room for equities to go up while all this money is coming in. The smart seem to get smarter, and the poor middle class has less opportunity. And I don't see that changing. But I think we'll all be anxious to see how they disguise rate hikes by putting out new securities at low rates, which would be a deception, because in reality, everything they print is going to turn into higher rates on the short and midterm. So I think the example of that is the 10-year Treasury. When you've seen since Biden's gone in, you've seen it go from 0.8% to double that. We've had an interest rate double, and nobody's even talking about it. But I think they will now. I think we're moving in. And this summer could be not as dead as it usually is because of all the things going on with that in Basel that we'll talk about in a few minutes.
Yeah, I'm really curious about current precious metals demand that you're seeing. We'll talk about that in just a few minutes. Before we go into the next topic, because I want to talk about the Basel III agreement, is the fact that just on the Fed, I was just telling our members yesterday how ridiculous it is to have a dual message. That is, we have a very strong economy. On one hand, is what the Washington is telling us. They've been telling us this for years. Yeah. And on the other hand, they're telling us we're not sure if we can handle a 25 basis point rate hike anytime now or anytime in the next several months. Isn't it absurd, Tom, that you would have a strong economy that can't handle a 25 basis point interest rate? I mean, it's almost just mind-boggling that people believe this.
Well, it is. It's hard to believe when you see the printing of money and you see the rollover. No security is paid off anymore. It's rolled over. It compounds. You get up to $30 trillion, even if there's only a 1.5 or 2% rate. 2% of 30 trillion, 600 billion interest per year. And I've said this on your show several times, but we fired Jimmy Carter in 1980. He had a $500 billion budget. Now we've got $600 billion interest annually on the budget.
Them good old days.
The size of government's gone up 15 times.
that something?
It's when's it going to crash or adjust? We don't know, but certainly we will now start as Basel III comes into existence the next 10 days in Europe, and then January the 1st in England and rest of the world. I mean, we're looking, Jerry, at the most exciting thing for gold that you could have. I mean, silver will profit because of tagging along, but gold will be a zero risk. Central banks are already buying, but it will accelerate starting next week, next 10 days and going up, because they can count gold as a zero tolerance investment that has 0% risk. I mean, gold is where it's at. Gold is where it's going to be. We have now moved to that time that we've been talking about on this show for 2 years, and now we're there. And you wait, the company we're affiliated with in Singapore, they can't keep gold or silver physical. And the key thing to this Basel III is now coming into play after basically 12 years when we had the financial crisis, when they had to meet and restructure this thing in Basel, Switzerland. That's where the name comes from. And now we are 12 years later, and it's come to fruition. Just think, if you've got anything beside government securities or gold, you have the rest of it has tolerance. If you've got a mortgage in the World Bank, you only get 20% counted because of the risk that mortgage may never collect. If you're going to put it out on your sheets worldwide under Basel III, it's going to be 20% for loans originated. I mean, it's unbelievable. So you're going to see an explosion, and Dan's going to get to in just a second talking about some of the problems we're having with product. Yeah, the premiums have gone up, but who cares? You're going to wish you had it, because this thing, every central bank in the world can buy gold now or in the next 6 months, 2 weeks to 6 months, but they don't have to wait. They can go in and buy it because they know what's going to happen. They just carry it now under the old rules of 50% of value, but it's going to be 100% risk-free in the next 2 weeks to 6 months. So it is exciting where we sit. It is exciting to see that people have finally understood that gold has been money from the second chapter of Genesis up to 1972 when Nixon intervened, and we've seen what fiat currency looks like over the past 40 years. I mean, I've done this 46 years. It's hard to believe. So with that, let me just introduce not only my working partner, but a good friend of mine. He's been working with me since the early 1990s. There was a period where he went off and ran a business and family business, and ran into him in church one day after we moved to St. Simon's. And Dan's wife is our children's minister. I mean, so it's a great thing that we got back together. He's been back with me 8 years down here, and we couldn't do what we do without him. And certainly most of you know that from working, the details of working with Dan and getting your portfolio set. But we wanted to introduce him where you could get a face with with a phone call, because many of y'all talk to Dan all the time. So with that, Jerry, I'd like to turn it over and let you ask, Dan, some questions about what's going on in the inventory world.
Yeah, Dan. Well, I mean, I know every time Tom comes on to the program, he talks about, you can either talk to myself or, of course, Dan, and you've been this faceless person that people have heard about, but when they call, they often talk to you to order gold or to order silver. So tell us what's happening. This has been a wild year. 2020 was a big year, but now 2021 is also a crazy year. We keep hearing about supply constraints. We keep hearing that demand is crushing in different ways in the physical market. Tell us what can you share from some of the trends that you've seen over the years, and especially what's happening right now?
Yeah, I would start out by saying that really going back to March of last year, the supply channels have been severely compromised. And, we go for short periods of time where we have a little bit of more product than we've had. But this year, going back to January 6th, which is a pretty famous date now, but January 6th of this year, we have seen historical, unprecedented demand for physical gold and silver. The phones ring from sunrise to sunset, day after day after day. I mean, we've had in the past pockets of time where we had this type of activity, but now it's day in, day out, all day long, virtually every day. And the demand for physical gold and physical silver is not lessening whatsoever. It seems to, whatever happens in the geopolitical world, in the financial economic world, people see what's really happening. And one of the things that has occurred, Jerry, that is exciting to me is we're getting some younger buyers in our market. I think some of these guys have maybe made some money in cryptos and want to pull a little out and diversify. And it's almost always physical silver. They seem to really tie the silver into electronics, which is a good thing to do because it's can't have electronics at all without silver. We couldn't do what we're doing right now without silver. So the demand is great. Now, the supply side of things, we've gone months at a time, literally months at a time, no 100-ounce silver bars, no 10-ounce silver bars. I mean, literally none. Now, we've got a little bit in-house currently, but it only takes 2 or 3 substantial buyers. The situation reverts right back to where it was, no 100-ounce bars. And the sovereign mint coins like the Philharmonics, the Britannias, the Krugerrands, it's kind of like we get a shipment in, half of it's already pre-sold before we ever get it. And then within a couple of days, boom, it's gone because the demand is so high. So we're doing all we can on the procurement side of things to boost inventories, but it's an incredibly difficult thing. And it has been since January 6th this year, for sure.
So you were mentioning, Dan, about silver, and silver, yes, has had, a lot of speculation. Silver draws speculators, right? We know this. I mean, going back for decades. And we've been watching silver in a particular price range between $23 on the low end, $21.50 being that multi-year support, but $23 on the bottom end of this channel. And then we briefly hit 30. I think it was back in August or something like that. And then we repelled that price. So we've been bouncing back and forth between 23 and 20 and 30. So when I think about gold, Dan, I think about something that is not necessarily used for speculation, but much more for insurance. People put it in their portfolios, as we're hearing now about the Basel III agreement. But, banks, can hold it on their balance sheets, and it's a zero risk asset. But silver, does the Basel III agreement apply to silver? And secondly, breaking out above 30 here, what if the Fed begins to backpedal and starts to taper? Do you think that this demand that we're seeing for silver specifically is going to be maintained? Or do you think we might see more of a shift into gold as the speculators wane in that kind of event? Or do you think we're going to see speculation wane? I guess there's several questions in there. What are your thoughts on that?
Well, I think that because the silver demand has been so strong day in and day out, I think that it's going to continue, kind of regardless of what Basel III or what the Fed does. It's going to impact it for sure, and it might for a day or two, but it seems like things revert right back to where they were, because people there was an article I read, I had a client send to me about by 2030, there will be the need for silver just in the electronic, and they had a fancy word for it, and I don't recall what that was, but that sector of the industrial demand alone would be 600 million ounces a year. Well, 600 million ounces a year by 2030 for sure will be all the world's annual production, maybe even more of it. So
Wow.
the demand side and the supply side together, I think just are going to support continuing strength in the silver markets. Will those Basel III, and if gold is favorably impacted by Basel III, which we think it will, then it's going to pull silver right along with it. You know, the old axiom of silver being poor man's gold is absolutely true. You know, if someone doesn't want to put $2,500 or whatever the number is into 1 ounce of gold, but if silver's at 35, 40, they can afford that. So they're going to buy a few ounces of it. So silver will be pulled up by gold just as a result of the Basel III agreement and things taking place.
Yeah, I'm very bullish on both of them personally. I think that, you know, when you think about the renewable energy demand, which is growing explosively, you need silver for that purpose, of the electronic demand, then these just reckless fiscal and monetary policies don't show any sign of slowing. You know, I mean, the idea that the Fed is going to slowly, you know, put on the brakes and really do something meaningful to bring us back to a sound economy is not anything that we're thinking. I was just looking, in fact, at the $8 trillion Federal Reserve balance sheet. We got up to $4.5 trillion in the 2008 or after the 2008 crash. They unwound it just barely, like they were able to unwind just a few $100 billion before they had to double it again, all the way up to $8 trillion. So how they're going to unwind that and what that's going to look like, it makes you really want to have some gold and silver in your portfolio, right? Absolutely. Well, it's been a joy talking to you two. Tom, it's always great to have you. Dan, it's been wonderful to have your face on the video so people can hear who they're talking to when they call. Let's talk briefly as we close. Maybe, Tom, share with us any specials that you have right now and what it looks like when a new customer wants to reach out to you. Many people have never bought gold or silver. They've thought about it. They think about maybe buying it through an ETF. Maybe they own it in their 401k that way. But actually owning physical gold and silver, that's what you guys do. People can call you, they can order silver, and then they get silver in the mail.
Right, Jerry, you're exactly right. You want to have that metal there, that not just that, because even in the Basel III, it's talking about allocated gold. It's not unallocated. If they go and start trying to, if all these world banks start trying to play the game of putting in some and using collateral to leverage up more ounces, they're gonna get left behind. This is the time that you want the physical gold and silver. And as your listeners know, because they were the first ones, we have the lowest storage rate in the world. They can go store it at a rate that we can't even mention legally on the show, but you can call Dan and he can tell you what that rate, but you get it in the warehouse, very low storage fee. And when you're ready to sell it, you just sign the transfer. There's no charge to mail it somewhere. It's already there in the warehouse. But for the ones that want it, then we pay all of your listeners free shipping to them if they want the metal in their hand. Now, when they're ready to sell, they'd have to send it back. But I think what Dan talked about in 2030, we're seeing that China is mandating all cars be on electricity by 2024. We're seeing all the Cadillac and Tesla up in their mileage to over 300 miles per charge. I mean, everything's going that direction. You can't, and then you throw the economic scene in. So what I would suggest the listeners do, call Dan, because what he tells you today to buy may not be tomorrow, because the inventory is revolving quicker than I've ever had it in 46 years of doing this. Never seen it revolving like it is now. And the last thing I want to mention is platinum is on the verge. We're now seeing that platinum's not really 42 times more rare than gold. We're now seeing figures of 55 to 60, where some of the major things in the Soviet Union and South Africa don't have near the deposits they thought. And I mean, we're seeing people saying now that platinum could be 55 or 60 times more rare than gold, instead of 42 to 45. And you were one of the ones that identified the uptrend, not only in gold and silver, but platinum. And we've had a great relationship calling those uptrends that follow the money. So my advice is call Dan, and it may be something different than it would be today.
I got to get this question in, Dan. Right now, give us your phone number, but also what's the best special that you have right now? I mean, what's the streaming deal that you have right now? Of course, it may not be relevant a week from now, but what do you have going on right now?
In today's market, we just got a good shipment of junk silver in dimes and quarters. And I can, the premium we were able to adjust the premium down a little bit for those. They won't be around for long, because obviously they don't make pre-1964 silver any longer. And the other would be a 100-ounce silver bar, LBMA, London Bullion Market Association approved bar. And they're priced right, about $370 over spot per ounce of silver. In today's market, that's cheap silver.
That's lower than anybody.
So I would recommend those two products in silver. Platinum, a 1 ounce Valcambi or Arger Heraeus bar is in inventory now, so we can ship it out quickly. And in gold, I would say either a 1 ounce gold carded LBMA approved bar at about 4% over spot, or if you want to coin, the Canadian maple leaf. They just gave us a $5 cut in our cost. And again, that by Monday probably will go right back up. So anyway, that's just the market today.
What's the phone number for the folks to call?
Give us a call at 800-247-2812. And Jade McKim can assist, but ask for me. I'll be here 8:30 to 4:30 Monday through Friday.
Folks, I've been working with Tom now for coming on 10 years. And during much of that time, Dan has been right there by his side, helping people just like you get involved in the physical markets, having some physical gold and silver to have in your hand. You don't own it unless you hold it. You've really got to buy physical silver. You can have some ETFs. You can put those in your 401k. You can have those in your IRA, but they're not real unless you hold it in your hand. And that's what we've been teaching here for so very long. So Tom has been a sponsor here at Follow the Money for quite a long time. I'm very grateful to have both of you guys today. If you want to reach out to Tom or Dan, just give them a call, and we'll look forward to talking to you guys again soon. I like this format. We got to do this again.
We will. It's a real pleasure.
Yeah.
God bless you guys. We'll see you next time.
God bless you.
God bless.